You're tuned in to Tax Talk DC with the Office of Tax and Revenue. Join us as we offer insights on the city's tax initiatives, share important resources for residents, and get answers to some of your most pressing tax questions. Now, here's your host, Jennifer Valentine.
Hello, and welcome to Tax Talk DC, where we break down the tax topics that matter most to you. I'm your host, Jennifer Valentine, and we've got another great episode lined up for you today. Joining me for today's discussion is Mr. Norman Evans, Esquire, Branch Chief of the Systems, Forms, and Accounting Unit within the Returns Processing Administration at the Office of Tax and Revenue. Norman and I will explore the impacts of the current administration's One Big Beautiful Bill Act on the District of Columbia and tax code changes that may impact you as a taxpayer. We are so excited to explore these topics with our esteemed guest. So let's get into it, DC. Hi, Norman. Welcome to the podcast.
Hi, Jennifer.
Thank you so much for joining us today to examine and clarify recent legislative changes that may impact DC taxpayers. Now, before we delve into our discussion topics, let's chat about your experience and your current role in RPA. Can you please share a bit about your background, maybe provide a brief overview of your responsibilities as Branch Chief of the Systems, Forms, and Accounting Unit in the Returns Processing Administration at OTR, and tell our listeners why you're the person we're discussing tax legislation with today.
Sure. I was born here in Washington, D.C., and grew up in the Kenilworth-Deanwood area of the city and Prince George's County, Maryland. After completing law school in 1980 and getting my bar licenses in D.C. and Maryland, I opened my own law practice near Superior Court at 3rd and I Streets Northwest. After the first 12 years of trying cases in Superior Court in the circuit and federal courts of D.C. and Maryland, I accepted a position at D.C. Superior Court as a Deputy Register of Wills, where I served for 3.5 years in charge of the fiduciary branch of the probate division. Thereafter, I re-entered private practice, where I tried cases for another 11 years or so before accepting the position of Manager of Estate Taxes for the Comptroller of Maryland. I served there approximately 8 years. In 2013, I accepted a position here at OTR as a program analyst in the Systems and Forms unit of our Returns Processing Administration. And in April of 2023, I was promoted to Branch Chief of the Systems, Forms, and Accounting Unit. So I have more than 20 years' experience working as a practicing attorney and more than 20 years working in government. As Branch Chief of Systems and Forms, my primary responsibility, along with my staff, of course, is to develop, update, and revise our tax forms and booklets every year as a result of tax legislation and other issues.
Wow, what an interesting career. Thank you so much for providing that background and an overview of your role in RPA. It appears we have indeed engaged the right expert for today's conversation, so I'm looking forward to this. Let's dive directly into the crucial topic that I'm sure our listeners are eager to hear your insights on, and that is the impact of the One Big Beautiful Bill Act, commonly referred to as OBBBA. This legislation was enacted in July 2025, and it has a considerable effect on federal taxes, credits, and deductions. So how would you encapsulate the events related to OBBBA and the district that will significantly affect DC taxpayers?
Well, as you know, the new year is already upon us, which means the 2026 filing season is drawing near. The D.C. Office of Tax and Revenue typically opens for filing at the same time that the IRS does.
Right.
And that's usually around the third week in January.
Okay.
However, something happened this past July, which may have an effect on when the IRS as well as OTR opens for filing this year. As you stated earlier, in July 2025, the United States Congress passed the One Big Beautiful Bill Act, which made several changes or additions to federal tax laws that can significantly affect federal tax credits and deductions. And on December 3rd, 2025, DC Council enacted the DC Income and Franchise Tax Conformity and Revision Emergency Amendment Act of 2025 in response to the One Big Beautiful Bill Act.
Okay, so I understand that tax code modifications brought about by the OBBBA have established both links and differences between federal and local tax laws. So I think it's crucial to shed some light on the overall tax implications this bill will have on the district. Let's explore how this federal act pertains to DC taxes wholesale and how it affects DC tax filers directly. And I think a good jumping off point would be explaining the concepts of rolling conformity, coupling, and decoupling, and why these are significant.
Well, the District of Columbia is a jurisdiction that has what is called rolling conformity with the Internal Revenue Code for both individual income tax and corporate income tax. Rolling conformity describes states that automatically adopt changes to the Federal Internal Revenue Code as they are enacted, unless the state specifically passes legislation to not follow a particular provision.
Right, okay.
So you have probably heard the terms coupled with the feds or decoupled from the feds.
Right.
These terms simply mean that with respect to a particular Internal Revenue Code provision, we follow it if we remain coupled with the feds, which happens automatically if the district does nothing, or we are decoupled from the feds if we decide to not follow it by passing legislation.
Okay, so you've outlined the connection between the Internal Revenue Code and the DC Tax Code, and you mentioned that the district has introduced its own new legislation in response to the OBBBA. What are the specific implications of the district's new law?
Well, the new law passed by the DC Council limits the number of One Big Beautiful Act tax changes that will affect district taxpayers. The result is several federal tax changes will not apply when filing district taxes. If we have time a little later, I will say a few words about why the district would consider decoupling from federal provisions. But I'd like first to spend some time talking about some of the changes.
Okay, great. So we'll talk about why the district made this decision a bit later in the episode if time permits. But in the meantime, how about you start with what you see as the most impactful change?
Well, the biggest change for district taxpayers, in my opinion, and an extremely important one, is that DC has decoupled from the federal standard deduction amounts and has established its own filing requirements for the D40 individual income tax return. The district's standard deduction amounts are now lower than the federal standard deduction amounts. So now what does this mean? This means many taxpayers will have to file the D40 individual income tax return, even if they do not have to file a federal individual income tax return. This is a very big change for district taxpayers.
Okay.
For many years now, district residents have been told that there was no need to file the D40 individual income tax return if you did not have to file a federal 1040 return with the IRS.
Right.
Well, that's all changed now. Everyone needs to take heed because you do not want to be subject to penalties and interest for not having filed your return. Now, as an aside, this is not the first time that DC standard deduction amounts were different than the federal standard deduction amounts. Before the Tax Cuts and Jobs Act was enacted several years ago, we had lower amounts than the feds. But despite that difference, the DC filing threshold was still the same as for federal. The new law has changed that. This time, DC has set its own filing threshold. Now, this is not necessarily a bad thing. Remember, there are other reasons to file a return if you are below the filing threshold or there is no tax to pay. For example, if you are seeking certain refundable credits, such as DC Earned Income Tax Credit, or a return of your estimated taxes paid, or money withheld for taxes by your employer, you will want to file a return to get your refund.
Right.
Also, even if you owe no tax, not filing a return when required may affect your clean hand status if you have a business. But this one point can't be stressed too much. The old saying that you don't have to file a DC individual tax return if you do not have to file a 1040 federal return has now gone by the wayside.
Understood. Okay, thank you so much for sharing that valuable information. Now, could you finalize this first major change by telling our listeners the basic standard deduction amounts for DC for tax year 2025?
Sure. The basic standard deduction amounts for DC for tax year 2025 are $15,000 for single and married/registered domestic partners filing separately, $22,500 for head of household filers, and $30,000 for married/registered domestic partners filing jointly and qualifying widower with dependent children filers. If your gross income equals or exceeds these amounts per your filing status, you must file a D40 return. And let me say, under our new revision of the D40 booklet, this information is placed very prominently so as not to be missed. So please pay attention to the instruction books. You know, a lot of people go straight to the forms without reviewing the instruction books because they are used to preparing the same forms every year.
Right. Okay. Let's shift our focus to additional changes. Which federal tax changes from the OBBBA will the district not recognize for tax year 2025?
The district will not recognize the following federal tax changes from the One Big Beautiful Bill Act. Higher federal basic standard deduction amounts, which has already been discussed.
Right.
Deductions for tips, overtime pay, or car loan interest. A larger tax deduction for seniors. And for businesses, the district will not recognize full expensing of research and experimental costs, changes to the calculation of the business interest limitation deduction, special depreciation for certain business production property, and excluding capital gains from the sale of small business stock.
Okay, that was a lot of information. So let's discuss the pertinent filing details about these deductions and tax savings that you think district taxpayers should consider, specifically how these changes will be captured on the return itself.
Sure. So with respect to tips, overtime pay, car loan interest, and the larger tax deduction for seniors, no changes to our tax forms are necessary. The district does not allow these deductions, so you will simply not see a way to deduct these items from your income on the return.
Got it. Okay.
However, with respect to the business-related issues I just spoke of, the full expensing of research and experimental costs, the changes to the calculation of the business interest limitation deduction, special depreciation for certain business production property, and excluding capital sales from the sale of small business stock, I need to caution you strongly. You must really pay attention this filing season to additional instructions concerning these matters provided in the instruction books and on the schedules. Because of the delay in normal OTR filing season readiness caused by the One Big Beautiful Bill Act and the new DC legislation, there was not enough time to program line changes to the tax forms themselves.
Okay.
Consequently, there are instructions added directing the tax preparer to make adjustments and sometimes add backs for those deductions that are not allowed at the federal level, but are allowed at the federal level,
No
but
worries.
not for DC.
Got it. Okay.
So for the D40 individual income tax return, you will see that the instructions for Schedule I, which is additions to and subtractions from federal adjusted gross income, particularly the lines for other, which is normally used for miscellaneous matters. Those lines are used to make the necessary adjustments.
Okay.
For the business books, the D20, the D30, and the D65, line instructions are enhanced to explain where and how to make adjustments. So please pay special attention to instructions this filing season. You will see a summary of what to look for in the What's New portion of the booklets.
Okay, thank you, Norman, for that crucial heads up. I do think this information will greatly assist taxpayers as they begin the filing process. So thank you again for that. Now, shifting gears just a bit, there are several other changes to the district's law outside of OBBBA changes that will take effect for the 2025 tax year. Can you please share those with our listeners?
Absolutely. In addition to the One Big Beautiful Bill Act related adjustments, several other changes to the district's law are effective for tax year 2025. First, the DC Earned Income Tax Credit is now 100% of the federal Earned Income Tax Credit.
Okay.
Also, the Child Tax Credit is repealed for 2025, so you will not see that on the forms. Regarding out-of-state municipal bonds, interest earned from bonds issued by other states is now taxable in the district. As mentioned before regarding other add-back items, there is an instruction to add back this income to district gross income if it was excluded on your federal return. For the D40, the instruction can be found on Schedule I, and for the business returns, you'll find applicable enhanced line instructions.
Okay.
Additionally, the federal accounting standards, known as the FAS 109 deduction, is delayed until tax years beginning after December 31st, 2029. The Schedule H property tax credit increases to $1,425. The income limits increase to $66,000 for people aged under 70 and $90,000 for people 70 or older. There is a new requirement that taxpayers over certain income thresholds have to submit electronic copies of their federal income tax return schedules and information with the filing of DC returns. This applies to individuals who are single, head of household, qualifying widower with dependent child, or married filing separately with gross income exceeding $500,000.
Okay.
Or individuals who are married filing jointly, registered domestic partners filing jointly, or registered domestic partners filing separately on a combined return with gross income exceeding $1 million.
Okay.
It also applies to corporations with gross income for the taxable year exceeding $2.5 million worldwide and $50,000 apportioned to the district.
Okay.
Unincorporated businesses with gross income for the taxable year exceeding $2.5 million worldwide and $50,000 apportioned to the district. And partnerships with gross income exceeding $2.5 million worldwide with $50,000 apportioned to the district.
Okay.
Also, fiduciaries of an estate or trust with gross income exceeding $1 million. Now, notice that the requirement is to submit electronic copies of your federal return information. Most people meeting the thresholds I just talked about are already filing electronically.
Right, makes sense.
But if you are filing by paper, please do not submit paper copies of your federal return. Visit mytax.dc.gov for instructions on how to upload your federal return, schedules, and information electronically, even if you have filed your DC return by paper. If you do not submit electronic copies of your federal return, you will receive a letter with instructions to upload your federal information on MyTax. Needless to say, this could result in delaying the processing of your return.
Absolutely, that makes sense. And speaking of mytax.dc.gov, can you quickly remind our listeners about the district's awesome taxpayer portal and how it can benefit them to utilize this tool?
Absolutely. We're very excited about that. mytax.dc.gov serves as the official online tax platform for the District of Columbia's Office of Tax and Revenue. It offers a free, secure, and convenient web portal for individuals, businesses, and property owners to manage their tax responsibilities. Users can submit returns and payments for individual income, business taxes, such as sales and use, corporate franchise, personal property, and real property taxes. On mytax.dc.gov, you can make tax payments using credit or debit cards or ACH debit. Users can easily access information regarding the status of their tax refund, update contact details like mailing addresses, securely save bank information for future payments, and manage payment preferences. Users can also view account balances, review tax return and payment history, and opt for a Go Paperless feature to receive correspondence electronically. The portal also allows users to set up payment arrangements and grant access to third-party representatives, such as tax preparers, to manage tax accounts on their behalf. We highly encourage all taxpayers to visit the website, create a MyTax account, and opt for digital letters and notices. This will enable them to receive information more quickly and keep their tax records securely organized. Users can reach out to the OTR's e-services unit by phone at 202-759-1946 or via email at e-services.otr@dc.gov with questions.
Awesome. Thank you so much, Norman, for that information. Now, we do have a few extra minutes, so let's revisit the topic of coupling and decoupling. So earlier you said you could share some insights as to why the district would decouple from federal and problems that arise with rolling conformity states. Can you talk about that?
Sure, Jennifer. On the one hand, being a rolling conformity jurisdiction has substantial benefits because states can take advantages of the Internal Revenue Code laws and structure. States with rolling conformity generally have fewer differences between state and federal tax laws,
Right.
and this simplifies compliance for taxpayers. However, one of the main drawbacks of being a rolling conformity jurisdiction is the diminished control over local tax policies, which can negatively affect the district's revenues and budgets.
Sure.
Automatically adopting changes to the federal tax code can compel the district to make tax policy decisions that may not align with its interests,
Right.
or that could overlook local economic conditions.
Mm-hmm.
Federal tax cuts or new federal tax incentives can drastically and automatically lower a state's tax revenue, resulting in budget shortfalls.
Right.
Now, some of the federal provisions were decoupled from simply because they cost the district too much money.
Right.
State budget analysts may struggle to accurately estimate the revenue impact of sudden and complex federal changes, leading to larger forecasting errors and uncertainty in the budgeting process.
Makes sense.
Automatic conformity can also weaken political accountability, as voters may be confused about which level of government, federal or state, is responsible for specific state policy changes or their repercussions.
Okay.
As we discussed earlier, decoupling legislation is sometimes necessary to prevent unintended consequences or revenue losses. Rolling conformity states frequently need to pass specific decoupling legislation afterward to mitigate the effects of federal changes,
Right.
as the district did with OBBBA. This situation can place state policymakers in a particularly challenging position where they may appear to be raising taxes or negating a federal benefit, even if their aim is merely to uphold the state's existing tax structure.
Right.
While decoupling from some provisions may have the result of not allowing certain federal deductions at the D.C. tax level, remember that D.C. has certain credits and deductions that are not allowed by the feds, such as Schedule H and Schedule SR. Saving money by decoupling from some federal provisions allows D.C. to continue its own state-level credits and deductions.
Right.
While general conformity streamlines administrative processes, choosing to decouple from certain federal provisions introduces new complexities for both the state's revenue department, which must create new forms and instructions, and taxpayers who are required to perform separate calculations for state and federal return. We talked about both of these situations earlier as well. And lastly, retroactive changes can pose significant issues. Federal law changes are often made retroactively to the start of a tax year.
Right.
In rolling conformity states, this can lead to immediate revenue losses before the state legislature has the opportunity to convene and respond to the change, particularly necessitating taxpayers to file amended returns.
Wow. Thank you for that insight, Norman. I do think this information helps us better understand the district's position with regard to the bill, and it is important for our listeners to understand the considerations that went into the district's decision to decouple. Now, before we wrap up, is there anything else you'd like to share with our listeners?
Yes, Jennifer. I have a couple of additional pieces of information I'd like to share.
Great.
First, I'd like to announce that this year, the D40B non-resident request is now available on mytax.dc.gov, where you can request your refund online. Also, in October 2025, OTR launched a redesigned website to make it easier for everyone to find what they need. The updates make the site much more user-friendly and easier to navigate. You will now find forms, deadlines, and important information more quickly and with fewer clicks on mytax.dc.gov. OTR's website address is otr.cfo.dc.gov, and we encourage you to check it out.
Awesome, Norman. Thank you so much for that. And finally, if our listeners have general questions or require any assistance, who should they contact and how?
If you have questions or need help, please reach out to our Customer Service Administration at 202-727-4829 or visit us at our walk-in center located at 1101 4th Street Southwest, Suite W270, Monday through Friday from 9 a.m. to 4 p.m., except on district holidays. Appointments are preferred, though walk-in service is available on a first-come, first-served basis. You can schedule an appointment online by visiting OTR's website or calling customer service. And I'll take one more opportunity to remind our listeners that many services are available online 24/7 at mytax.dc.gov, which is often the most convenient way to find information and complete transactions.
Wonderful. Thank you so much, Norman. And with that, we'll conclude today's episode. We want to extend another heartfelt thank you to our wonderful guest, Norman Evans, for breaking down the impact of recent legislative changes on your taxes. Norman, it has been an absolute pleasure talking tax with you today, and we truly appreciate your time and expertise. To our listeners, we hope you enjoyed the conversation as much as we did, and that these tax tips will be of value to you. Remember, visit mytax.dc.gov for more information and to manage your taxes with ease. We're looking forward to bringing you another great episode, and we hope you'll join us next time. Until then, I'm Jennifer Valentine, and thanks for listening to Tax Talk DC.
Thank you, Jennifer.
Thanks for tuning in to Tax Talk DC with your host, Jennifer Valentine. For more information and resources, visit mytax.dc.gov.